The Federal Reserve just paused interest rate hikes for the first time in 15 months. And those were some painful 15 months. The banking crisis, housing affordability just plummeted, mortgage rates skyrocketed. Like all of the bad stuff that could have happened during that time period. And while the pause would be good news for the Kansas City real estate market, and it might just have signaled that mortgage rates could predictably decline for the foreseeable future, it's not all sunshine and rainbows. In fact, they signaled they'll probably raise rates again 2 more times through the remainder of this year, hence ratcheting up all of the pain that we've undergone over those past 15 months. So the big question right now is the worst of it behind us? So the Federal Reserve made that decision to pause on Wednesday, and on Tuesday, inflation data came out from the month of May. Now, this is what the Federal Reserve looks at to determine whether or not they should pause, increase, decrease rates, and it actually came back positive. It exceeded expectations. Now, here's exactly what it looks like. We had inflation data come back at the lowest point since April of 2021. Well, this is certainly good news. Unfortunately, the big problem here is that the target rate for inflation year over year is under 2%, which means we still have a long way to go. And that's exactly why they decided they're likely going to have to raise rates over the next 2 months. Now, you might be wondering, why prolong this? Like, why not get it done all at once? And I could not agree more. Like, don't pull the Band-Aid off as slowly as you possibly can. Well, it's very clear there are a couple things that they're not sure of. This is a complete stalling tactic. They've left every single door open. They're hedging their bets because of 2 reasons. Number one is that they need to make people aware, they need to make the market aware that there's a possibility they'll have to raise rates. They must have some reason to think that that inflation data that came back pretty good this month, that it won't continue or it won't meet expectations next month. Now, the second reason is that even that good inflation data this month is still well above that 2% target, right? A long distance from 4% to 2%. We've still got a long way to go here. So if we go back to that first question in the beginning, is the worst behind us? It looks like that's the case, but looks can always be deceiving.
Appearances can be deceptive.
The things that I'm looking at. Number one is that they signaled, even though they might have to increase rates, that those rate hikes will just be smaller than we've previously experienced. We've experienced some pretty significant ones, which is partly why all of those banks collapsed and mortgage rates just spiked so fast. Now, the second thing, specifically for the Kansas City real estate market, is that mortgage rates are based on long-term calculations. These interest rate hikes are very short-term. So over the past couple of weeks, we've taken a look at this chart, which is basically a compilation of predictions about where mortgage rates will be later this year. A lot of the leading research firms predicted that rates would start falling at the end of 2023. Well, if they do go ahead and increase interest rates and they push up mortgage rates as a result, we can expect that timeline to just be a little bit more delayed. So maybe instead of seeing mortgage rates start to drop in the later part of 2023, maybe it's the earlier part of 2024. So TLDR, if they do increase rate hikes, they'll be smaller, they'll have less of an impact. Most of the pain should be behind us. Now, of course, the uncertainty in the interim is going to cause mortgage rates to kind of be a little bit volatile for the time being, and experts are very conflicted over this as well. So according to this article, which interviewed a ton of different experts about this matter, here's what they all had to say. Goldman Sachs says that this is pretty consistent and expected. Prime Capital says it wasn't quite a surprise and they're just buying time to see more data next month. Another expert says that the hawkish tone was a surprise and indicates that the Fed expects future numbers to be rough. David Rosenberg feels the same way we do and says, get it over with already. They are playing with fire. Another few say that it was hawkish. Another says that Jerome Powell is still a barking dog, but might be losing his bite. Now, experts and research firms are not just conflicted over this interest rate situation, they're also conflicted over the home price situation. For example, according to this article from Fortune.com, while CoreLogic and Zillow expect home prices to actually increase by about 4 or 5% over the next year, most of the models from other research firms are expecting negative home prices during that time. They also go on to say that this is mostly because of housing affordability, and since mortgage rates are super high, monthly payments are high, and that happens to be one of the biggest drivers of the affordability crisis in the get-go. So whenever those mortgage rates start to fall, the housing affordability situation starts to improve, and home prices will start to hum back upwards. Now, in case you're holding off or waiting for home prices prices in Kansas City to finally drop, which I have to admit, I'd love to see that myself. It just does not look probable in the near-term future. And Fortune.com warns that this is the case. They say that national prices can drop without falling in every market. And to add my own input, Kansas City looks very strong. We've got a huge housing shortage right now, and maybe once mortgage rates drop, more people will be willing to sell their home. The problem is most of those people are going to turn around and buy a new home. We've also got a huge wave of people relocating to Kansas City because if you look at the West Coast, you've got things like crime. The home prices are just plummeting and collapsing, and a lot of people want to relocate to areas that are more affordable. Kansas City happens to be one of those places. So overall, this rate hike situation is like kind of good news. We're like kind of in the right direction. But the fact that the Federal Reserve is basically hedging their bets, they're saying, look, you got to be ready because we don't know what's happening next. That leaves a lot of questions unanswered. It also creates a lot of room for unpredictability and volatility in the housing market, the economy, mortgage rates, and everything else. So while I would really like to give you a clear cut, hang your hat on it answer here, there's just a lot to be resolved. So what I can do, if you subscribe to this channel, we do these updates every single week. We're going to follow this, make sure you're ahead of the curve. You've got all the information you need. And if you subscribe, you'll see these videos as soon as they come out. If you enjoyed this one, make sure you hit that like button below. And of course, this is what I do full time. I research the real estate market, make sure my real estate clients, when they're buying or selling homes in the area, are set up for success. And I would love to do the same for you. So if you think we'd be a good fit personality-wise, then go ahead into the description. All of my contact information is there. Call, text, email. We can set up a time to talk and create a plan to make sure you're ready for whenever it would make the most sense for you. Thanks for watching the video. I'll see you on the next one.